Hey traders, my name is François Blais. Make this quick video for Canadian traders. Just follow me on Twitter, on TradingView, and also on YouTube, my YouTube channel, François Blais. You can see a couple posts there and also video as well on financial markets, right? That's what you call ECO.FIN, okay? So basically, I just want to share with you these charts, which is very impactful, picture, because what we see now is very funny actually, because the all the major assets rally, right? We see crude oil rally, we see the dollar index, also the DXY rally too. We'll see the gold also rally, and we see again the USD yen, which is usually most of like the factor for risk on or risk off on the market, so the fundamental asset. And the only thing that you guys have to, because I see a couple retail traders screwed up through this market, because most of time empirically this asset that I just mentioned has to be inverted correlated, right? When we see the dollar index going up, we supposedly see the oil going down, or also the most of commodity going down, because it is backed on the dollar, right? So at that time we see like strangely all these major asset rally, but when we see the major or overall performance since the last banking financial crisis 2009, we are pretty it's pretty surprising to see the oil, it's always minus 44%, and the USD yen also is just almost around 8%, because basically it's used for doing hedging, right, as the gold. But the gold is extremely on the uptrend, and also we have a stable volatility on the dollar, right? Basically is the factor, it's coming with the factor of the inflation core, right? This is the inflation factor, because the most of time that the Fed used to provoke artificially the inflation doesn't coming up, right? Because basically the inflation used to go with the growth, right, which is the Arthur Ockham law. And by this theory, normally the most of economic indicators, which is have underlying of inflation, must be strong and must be also follow the evolution of the conjunctural market. But it's not that we see now. And recently most of these assets going up and rally, right? So it's still again the inflation factors and inflation dilemma, because the Fed didn't have like the power right now to provoke the inflation as they did in the last 2014. So they still continuing to injecting money in the financial market system. They're doing like the forward guidance, as we see again in the ECB on the Europe zone or Europe area, economic area. And they do it again like in 2014. They said they were starting to cut the size of the overnight repo operation at the 2014, and we saw again the dollar rally. So this scenario that we see now is a kindly a bis repetita as we've seen previously before, and is exactly the same scenario that we are right now. The dollar accelerating, it's probably pricing to going onto the 100 points, because the lowest registered on the dollar was in 2012, 2013. It was like close to 92 point, and the highest record on the dollar was in 120 point, right? So we are pretty much in the middle, and we're starting to progress and probably going to reach 105 or 110, right? So oil still like in a downturn performance, regarding the fact that we have a strongest rebound recently by the possible agreement between Russia and the syndicate of the oil and oil producer and exporter. We also seen USD yen, which is used basically in forex market or doing hedging by option and also by the spot market between the hedge fund. And we see also the gold will rally supposedly because of the fear of the coronavirus. And the coronavirus right now is quite stable. We don't have like a very bad information on that. And if they starting to just like doing like the emergency worldwide emergency, they said that the coronavirus starting to spread a lot and is going to Africa, those things, we will see again the risk on the market, and people will looking for the risk appetite product, as we see right now on the gold. But if they don't talk about that, and they show that the market feel more confident, and the Fed wasn't no worried about the fact that the coronavirus is looking to be very bad and jeopardize on the whole country in the United States or the major country. They probably seen a quiet, in my human opinion, the market will be probably quiet, and we will see also the index continue to capping and rally again, and the whole equity market will be stable, and the bond market also will be stable and all rally again, right? So right now, as we see, is only the inflation, because when the big investors as the hedge fund traders are studying that the Fed starting a communication on cutting the size of the overnight repo market operation, and also the cutting the balance sheet as for injecting money, they jeopardize on the bond portfolio. So they probably now said we have to fight against the possible artificial inflation that the Fed would like to do, because if the Fed doesn't do that, economically it's making some threats of the deflation. So that's why the gold starting to rally again, and the USD yen used to be like a hedging of the major asset if you're not risky, or you want to play just to put a market and stay quiet and protect your money. That's why big investor playing that way, right? And the oil is based on the fact that is between a geopolitical concern, or maybe in the inflation fact, because Jay Powell said recently that he is very embarrassing the fact that all the major quantitative economic data not following really well the inflation. So that's why he probably used a technique, macroeconomic technique, to provoke an artificially inflation. So that's why he said to communicate more and more to cut the repo operation markets. And this is just the anticipation of the specialists of the market to take a position to be bull on the overall market, right? So that's why right now, if you are a day trader, if you are, I recommend you to be a day trader, actually, not be an investor. So if you day trade this market, just putting a chart on the rate interest and the inflation, and look at the yield on the bond between this market, and then shorting like the week. You can practicing the currency. This is a good market to do the carry trade. So you have to short all the weak currency and buying a currency which is stable or maybe going up. But be very careful with that, because if we restart it again, as I said, some threats or jeopardizing on the communication by the Worldwide Health Organization, WHO, on the coronavirus is starting to be very worrying about this pandemic. It could be also make a sell-off, massive sell-off on the market and end up the liquidity right now. Okay, so this is just a quick observation that I would like to share to you. I hope that you understand the strategy, the macro strategy to do. If you don't, please feel free to ask a question below this video. My name is Francois Ablé. You can find me through different social media as well, Facebook, Twitter, and also you can send me a mail by contact@globalstreettrader.com in one word. Thank you so much for watching this video. Have a good day. Bye-bye.